Bitcoin, a dance of dragons, as we have many people who believe that the bottom is already in and therefore the price will continue to rise higher. And we are seeing the first structural evidence on the chart that we may in fact need a pullback from these recent highs. In today's video, we're going to be looking for clues across the higher timeframes for what is most likely to occur next for Bitcoin. Welcome to Bitcoin Escape Plan. If you enjoy the analysis and you want to support my work, then you can like the video and share this video with someone else who trades crypto. Let's get into it, guys. So first and foremost, the 4-hour chart is going to give us the most evidence in the short term right now. You guys already know I exclusively cover this in the 4-hour break room. That's my private membership. You can check out more information about that down below. And I have been giving updates pretty much all morning. So you guys on YouTube are hearing this a little late, but I have already entered another short. My cost basis is 79.3K. I was early. I was going over that in the membership where I was very early on that. There was a point during that trade where I was already in significant loss. And what I ended up doing was I took a futures contract long to mitigate some of that loss. So that's something I'm going to continue to work on with my strategy, because you guys know, if you've been subscribed for long enough, you know, sometimes I'm early. I really am thinking about this as more of a scalp trade than specifically entering a new swing trade. But broadly speaking, what we're going to talk about in today's video is these two Fibonacci pivots that have opened up on the 4-hour time frame, I think are the most telling for us. I say this in the newsletter. Make sure you go check your email after you see this video. We do not have daily pivots yet. We don't have daily pivots until the start of September. Oh, good. The price is going lower. That's excellent from my short. And subscribers will be well aware. What does that look like, guys? What does that formation look like? That looks like a kissing candle. If you want more information about that, you can watch the video at the very end of this video, my Bitcoin Advanced Trading course. This is the first one that we've seen in a while where I would actually say, hey, you know what? That is telling me something very clear. None of these guys were telling me anything clear, and it was dangerous to short anywhere in that range. So we are kind of seeing the first evidence that it is acceptable to short, and there's a couple different things that I'm going to be looking for that we'll start going over in today's video. So on the daily time frame, what was our daily close / weekly close? About 77.7. So that's after we lost some of our initial momentum on Saturday and then gave back even more of that on Sunday. So Sunday and Saturday were both fairly boring. Sunday more boring than Saturday, which is not common. Typically it's the other way around. The larger move typically will happen on Sunday instead of on Saturday. That was not the case for us this week. And then we've had one more tag higher, which I believe was very early this morning. We had our initial tag to, this is only showing it as 79.9. Coinbase is showing me 80.1K, but it looks like we're actually still rejecting. Let me see if that's the same on the 4-hour time frame. Yeah, okay. According to this index, we have not broken 80K yet. So again, I saw that on Coinbase. I'm sure it's probably the same on Binance as well, let alone if you're trading in some currency other than the US dollar. You weirdo, then it could be quite possible that we're already seeing higher significant targets. But relatively speaking, it's still kind of struggling with that middle band of the downtrend anchored VWAP. If you have no clue what I just said, go over here to courses. I explain that tool in more detail. But that's pretty much across timeframes. Like across timeframes, we've had an interaction with the middle band. I'll talk about the 4-hour time frame again at the very end of the video, but the daily time frame is the one that I think we really want to pay attention to, because it's got a wick to it over on Friday that got rejected. We then got rejected both of these instances, and even though we have now broken through it, subscribers are well aware, this is a magnetic force, not a concrete wall. So just because we're on the other end of the concrete wall doesn't mean that we're going to continue in that direction versus get pulled really hard back to the downside because it wasn't a sufficient enough move to kind of escape the gravity. I am not a physicist, but we have to have a significant amount of force in order to escape Earth's gravity, you know, otherwise we just get pulled right back in once we get to a certain point of the atmosphere. Not a scientist or an astronaut, just a Bitcoiner. Let's look at the higher time frames. Anyways, same thing, like I said, the anchored VWAP, the middle band, that's going to be the most telling for us across time frames. So just as a reminder for anyone who doesn't want to go over to that course thing, go underneath forecasting, go to volume based, anchored VWAP. You're going to click it. You're going to go to the 126 all-time high in October. You're going to click it and put it on there. It's going to change your life. It's going to give you a whole bunch of information. That's free. Do whatever you want with it. So that's how I was able to anticipate. Subscribers are already well aware of this. I was able to anticipate the 83K peak in May all the way back in February. I had been saying that in videos from February to May, primarily because of, one, we have some structural weakness right around that point in the 2025 dips, or rather, that's about where support started to kick in for 2025. So I knew if we could not rise and sustain above that level, it was going to confirm that same level as resistance. And at the moment, that's still the case. We're even paying close attention to this older 80K Fibonacci pivot, which of course was not as important for us back in May. We kind of ripped through it like tissue paper. So we're now lower, obviously. The anchored VWAP is now lower than that 80K Fibonacci pivot. So again, what that means is it just puts more pressure on 80K as resistance instead of support. So what I think is the most likely, and we'll actually see this on the weekly time frame reflected more than on the monthly time frame. I'll get to that in a moment. Let me get the monthly time frame things, and then I'll get to what the weekly time frame is telling us. So what the monthly time frame we have to pay most attention to, I would say, is two primary things. The two primary things are, one, how many green candles do we typically expect to see in a bear market year? Subscribers are already well aware, 3 to 4 green candles. We have printed 3 already. I see no reason whatsoever that unless the stock market collapses tomorrow, I see no reason why we will not see our 4th green candle printed in the month of August. I think there's no point in arguing that we're going to get a retracement all the way back to 62.8K now. We got that already, guys. We got that gap fill at the beginning of the month. We are not going to get it now. This is not, in my opinion, just inherently runaway bullish. What it is it makes the job of September way easier to be a red candle. And again, what the charts would tell us is that once we have this 4th green candle, we don't get any more for the rest of the year, period. We don't get any more. The rest of the candles are red, is what, again, the chart historically would tell us. Now, this is a divergence. We have had 2 candles together that are green before in a bear market year. We have not had 2 sets of green candles together. So again, possibility that we could break to the upside, primarily based on this other signal that I'm paying attention to on the monthly time frame, that being the monthly SMA itself. So typically speaking, once we have rejected the monthly SMA, which we did all the way back here in November, December of last year, it is usually a period of about 7 to 13 months before we have reclaimed it. We are on month number 9. So obviously, it's not 7 months, but we are really getting to the point where it is more likely actually that we will retest it than we will not retest it. I think broadly speaking, this will continue to pull the price higher, and it will be functional impairment in the stock or bond market that actually forces the price lower. It will really seem, by all accounts, that the bottom is already in and that there's no reason for the price not to continue higher. Even though, again, this is the craziest statistic when I look this up. For every $1 of spot exposure right now, there are $94 of leveraged exposure. And that was last week, so it might be even a different number now, Like, to me, that means that the $1 to $3 billion worth of shorts that got liquidated over here on the bottom of the range, why on earth wouldn't the same be true for these longs? If we have significant longs, and you can see this reflected on the anchored volume profile, that's the other free tool that I use. Again, same place, right underneath anchored VWAP, under volume base, anchored volume profile, that's this guy over here. So you can see people have really stepped up between about 77.9K and about 75.6K. They've started to fill out the profile there. However, our structural weakness on the chart is between about 86K and about 72K. What does that mean? That means that there's not enough people who bought at those levels to care that we are back at those levels. So again, between about 75.6 and about 77.9, people have stepped up, people have started to enter. But again, if we assume that the majority of those people are in leverage positions instead of spot positions, it's not that hard to liquidate them simply by tapping down towards about 73K again, which again, that's one of those fib pivots that I talked about earlier where we got 73.3 and about 79.7. It's not impossible this early in the week for us to retag that 79.7, but if we continue to show that 79.7 is resistance, it's going to want to pull back towards that 73.3, which again is going to force a series of liquidations. It's not going to force the entirety of those people out of liquidations, but again, if we start to push below about 75.6, those people that have stepped in recently will start to be in loss again. And they will have to make serious decisions. And I do think about this quite a bit. The bulk of the volume, the bulk of the volume really is between about 72K and about 60.5K. That's the true, one, we've got our point of control down there at 64K, but two, you can see it very clearly on the chart. That's just where the most people have bought. We got a lot of people who bought between 86K and 98K. Those people are going to have to really, really dig deep with themselves as the price is at around these levels to decide, am I comfortable with a 10% haircut rather than, you got to remember, these people have been in significant loss all year. For anyone who bought basically after January of 2025, all of those people are in loss other than anyone who bought during the pullback. And even then, most of those people are still in loss, even if they bought in the pullback. So the psychology of those individuals as we rise to these levels is not, I want to buy more, I've been in loss this whole time. It's, man, get me out of this thing. This is not what I thought it was. Again, this is a cohort of buyers that is not true Bitcoiners. This is people who are buying in ETFs. They're buying with whatever, their retirement managers. They don't have custody of the Bitcoin. They are impartial to the Bitcoin. It is very easy, again, for those people to get bullied at these levels. So me personally, I am not someone who is convinced that the bottom is in until we start to get multiple candle closes on the weekly and daily time frame above 83K. If we start to see that again, I have to acknowledge that we are more likely to get a monthly SMA retest than we are to not get it. And now subscribers are aware of this, but what happens once we get that monthly SMA retest? We may pull back off it initially, but the trend is pretty clear that we start to head up after we have that initial tag. What we don't know, again, is if we're going to get closer to a 2018-2019 scenario or the 2022 scenario, where we initially tag it and reclaim it and then still have to pull down lower before we are able to pull back above it. I don't think that's impossible. I think it's really going to come down to when or if we see the structural weakness of the stock market, and then combined with the stablecoin initiative. That it's like, I know you guys don't always want to hear me ramble about that, but to me, that is the most important narrative. Is not what the SEC decides, what the CFTC decides. It is, does JP Morgan send you little pamphlets in the mail extolling you to buy X amount of stablecoins because they're going to give you X amount of bonus points for transacting with said stablecoins? That is what the federal government needs them to do. The federal government needs them to find new buyers for US debt, or the entire thing collapses. So once that happens, once we are inundated with mail from JP Morgan Chase and Citi and everybody else trying to get us to use stablecoins like monopoly dollars, that is what will bring hundreds of billions, tens of trillions into not just Bitcoin. I personally am of the opinion that once we shift into that regime, the banks are going to want you to buy car loans. The banks are going to want you to buy a mortgage. They are going to want you to take those stablecoins and use the existing instruments that they've used for a century. You know what I mean? And the Bitcoin will kind of be like an added thing where they're like, or you can buy this digital currency that's directly connected to these stablecoins. Like, I don't think it'll be a one-to-one correlation that $10 trillion worth of stablecoins comes in and $2 trillion of that is Bitcoin. You know what I mean? I don't know that that's guaranteed, but it is likely that a significant portion of it will be flowing to Bitcoin. And for me, that's when we get something like a meteoric rise. And again, you've got to remember, just by the law, that is January 18th of 2027. That is when the Genius Act actually goes into effect, and where banks have to start offering whatever they've decided are the stablecoin rails that they're going to be using. So for me, that's when real money can come into the market. Until that time, we're just dealing with money that can be bullied. That's my opinion, but that's what the chart is telling me from multiple points. Again, Structural weakness at 80K would be indication of that. Structural weakness at the middle band of the downtrend anchor VWAP would be confirmation of that. And structural weakness in this thin part of the anchored volume profile would also be confirmation of that. Not least of which, me personally, I think this is ridiculous. Why? I'm finally going to the weekly time frame. I'm on a ramble, guys. Why on earth would the people who bought in this candle be the only people in the history of Bitcoin who have never experienced pain in a market cycle? Why? Explain to me. Explain to me why those people in the candle that was the same candle where the government said, hey, we're going to increase the amount of money that we have to buy back our own treasuries because nobody else wants them. Why on earth would the people who bought during that hype cycle never experience pain? To me, that is illogical. To me, that is not how Bitcoin behaves. And therefore, it is not my base case for what I am anticipating is going to happen in the market. And I would assume we are going to get a pullback, which again brings me to the weekly time frame. So there's one structural thing that I would want to pay attention to separate from the middle band of the downtrend anchor VWAP itself. That is the upper Bollinger Band. So the upper Bollinger Band, typically speaking on the weekly time frame, we do not see a reclaim of it until around January. So we have lots of time. So obviously every cycle is different. There's slightly different time periods. As you can see, we're already starting to rise to it. I think I went over this in yesterday's video or the video before. So over here, we have a slight period of time where we are rising. Again, we're seeing an uptrend on the upper Bollinger Band. It still resounds to the downside well before we ever actually have a retest of it. So we have our initial retest here. We're down below it this entire time period. We have our initial retest over here in November, still reject it for that one last lower low. And then we start to reclaim it. And as you can see, once we've tagged it, the writing is on the wall. We're just going to continue higher. So pretty much same thing over here in 2018, 2019. Very similar, where we start to see it curve up one more time. We start to see probably evidence at that time. I mean, this is when ETFs were getting denied. In July, the Winklevoss twins got denied. And I think it was October or November. I forget if it was Grayscale or who it was, but somebody else got denied for the ETF at that time period. We didn't get those, as you guys know, until December of 23 into January of 24. So narratively speaking, I don't know exactly what caused that crash in 2018, but the only thing that people were talking about was the potential of the ETFs. So again, same rough structure where we start to see the weekly band start to slope upward. Price still does not get there, still rejects, and doesn't reclaim it until the next year, in this case, April of 2019. So that's not my base case. I do think it's probably closer to January that we have an interaction with it, but that's the two last cycles where we saw basically the same pattern, where we rose towards it, got rejected. We're far away from it, started to pull upwards from it, and what happened in both of those other instances is we got rejected. And then we did not actually tag it until one more leg where it rose and then fell. And then once it had fallen, that's when we were able to retest it. And again, in both of those instances, it really seemed like the price was about to reclaim. Less so in 2018, 2019. 2022, it seemed more likely that the price was about to reclaim. And again, it did tag it and then initially dropped once more. So for me, again, I have to ignore everything that I already said in order to believe that the price is going to go higher. I have to ignore all of the points where, structurally speaking, we are nearing a point where we would expect at least a retracement. It doesn't mean that we're done. We would expect a retracement at these levels if it is not handily confirmed as support. If it's not obvious that 80K is an easy level for us to cut through like butter, we're not going to get to 83 or 86. And it's really not until we get to 83 where we actually have to call into question the structure of the chart, where the structure of the chart is no longer a downtrend. The structure of the chart has become a double peak at that point, and we have to acknowledge, okay, what does that mean for the trend? Does that mean we get a further period of consolidation? Does that mean that we get a tag higher and are therefore now in the bull market leg of the chart? And again, if you're just looking at what it says today, that's what it looks like, But that is what it looked like in 2022 as well. That's what it looked like in 2018 as well. So for me, I am not yet convinced that we are going to go higher. And again, I am positioned short. I'm doing pretty well on that short at the moment. I am prepared to close it. I forget the level I told the membership. 60 or 76.3K, my beloved 76.3K. I would say that's pretty important. I think the target that I was looking for was actually a little bit lower than that. The members already know. It's a secret. I'm not telling you. You can go look at the information about the 4-hour break room down below if you want to get more information about that. Still running a trial membership if you guys want to try it for a reduced rate for your first 3 months. Also just looking for feedback on how I can make these videos better and continue to deliver you guys solid analysis. Really, all I can do is just give you like a brief kind of snapshot of what I believe is going to happen with the price every day. And then, yeah, if you want my intraday updates, or as we're tagging major points on the Bollinger Bands on the 4-hour time frame, that's where to get it, is down in the membership. Everything else you need is on the website, as well as if you want to read my book to understand how I became like this. You can read that for free when you put in your email. So, structurally speaking, we've got that one point on the weekly time frame where we don't have an instance where we re-break the upper Bollinger Band this early. We don't have it. It doesn't exist. Does that mean it can't happen? No. But we don't have it. It doesn't exist. So what we do have here is the middle band of the downtrend anchor VWAP. Again, the middle band of the downtrend anchor VWAP, typically what happens, in a downtrend at least, is we continue to get rejected off of it. Now that doesn't mean that we can't break above it. We broke above it initially here, but that's basically where we started it. So I hesitate to refer to that the same way. But every other instance, we have rejected it. This is our first instance where we have reclaimed it, but what is the body of the candle doing? The body of the candle is still below it. So we have a rejection here on the weekly time frame. Now, granted, this is a very bullish candle. I'm not discrediting that. This, again, if you guys are subscribed long enough to already know this, all of the technicals told us last week prior to, or 2 weeks ago, I guess, prior to last week's rise, the technicals told us that we were going to drop lower because we had failed the bottom band of the downtrend anchor VWAP, we had failed the 64K Fibonacci pivot, and the point of control itself, the point of the chart where the most human beings have pressed buy or sell, had dropped from 66.9K down to 64K, therefore making 66.9K basically tissue paper when we got there on the way up. Structurally speaking, none of that is bullish. None of that is bullish. You know, it's purely the news and the hype cycle that has pushed us back above these levels, as well as this reclaim of the weekly SMA. Now, typically speaking, what we would see in a bear market year is about 1 to 3 weeks elevated above the weekly SMA before we need to start giving it up. So what is going to allow for that movement to happen is, again, continued rejection here at the downtrend anchor VWAP. I would say on the lower time frames, I would pay attention to the 4-hour and the daily time frame primarily for getting actual confirmation of how the price is behaving at that, because this is the weekly. So the weekly, we really won't get confirmation of that until the end of the week, and I think it's going to be more obvious by probably Tuesday or Wednesday. I know there's a couple other important, Jackson Hole, I think, is Thursday or Friday. So there's a couple important financial things that are going to come out later this week that could change this very quickly, that could either help extend us past that 80K, 83K target, or they're going to make it pretty clear, okay, at the very least, we need to retest back towards the weekly SMA, and then we'll see from there. You know, there's nothing really preventing the price from continuing higher after that, just not typically what happens. Like this right here is the second longest time period on the chart during a bear market year that we've remained elevated above the weekly SMA, about 7 weeks. That's not common. Typically speaking, it's about 1 to 3 weeks that we're elevated, and then it rejects back to the downside. So currently we got 1 week elevated, and really it's like half a week. That was Wednesday to Sunday. That actually was the bulk of that move. And then what we would expect for this week is, again, it either reclaims that middle band and then trends higher, or it needs to retest back towards about 76.3K. Now you guys already know that's what I had talked about for the majority of the week towards the weekly close. That's what we wanted to pay attention to. Obviously, we closed higher than that. So what that means is the price is going to want to check to make sure that 76.3K is support, which I think is what's happening right now. That's broadly speaking, like I said, I'm thinking about the short that I'm in right now more as a scalp than as, you know, continuation of this is a swing trade now. This is what I'm staying in for the foreseeable future. I don't know that yet, especially because September 9th, they actually start the buybacks. September 15th, they're going to talk about the Clarity Act again. If they do not vote to move forward with the Clarity Act, I don't care. I see so many people making content about how the Clarity Act doesn't matter. The Clarity Act doesn't matter. Those people are wrong. Until the stablecoin initiative is decided with the banks, we are not in a bull market, period, guys. Like, I don't care about all the other narratives. I don't care that Trump says that the US is going to start buying Bitcoin. He's been saying that since he was running. They still have not done it. So I do not care personally until the banks have issued a mandate, or rather, like, they have decided which stablecoin issuer they're going to use for their rails, and they are sending you little pamphlets in the mail to get you to use X amount of stablecoins to get X amount of points, period. Until that happens, in my opinion, we are not in a bull market. So what I would be looking for this week, again, I would think that the upside move is going to start to run out of momentum by Tuesday evening. So obviously pay attention to the daily close today. Let's see. So we would, if you are in the camp of you want the price to continue to go higher, you would want the price to close today above 79.4K. That would be above the middle band of the downtrend anchor VWAP, and that would allow, again, for the price to continue higher. Looks like to about 82.6K would be the next relevant target higher. And even then, that would be still a rejection. We went to 82.8, 82.9 in May. So I wouldn't necessarily say that is like, oh, we're bullish now, but that's what I would be paying attention to for the daily close specifically, as well as this guy right here. We would want to see above about 78.3K if it is actually still going to get another bid towards 80K before the end of the week. Otherwise, I would think that the price is going to need to retest. And again, it doesn't have to retest all the way. Like on the daily time frame, this is 71.7K is the next fib pivot. I don't think that is the case. I think it's more likely that we would go to one of these wicks first. 76.4 is close enough to 76.3K. So I think broadly speaking, guys, if we do not get another push above 80K between now and Tuesday, I would think that we start to trend towards, at the very least, 76.3K, where we either form support there or we continue to break down towards the lower targets, which again we have on the 4-hour time frame now. We do not have on the daily time frame. So again, on the 4-hour, guys, really tight in that range between, this is the elder VWAP, this is the anchored VWAP. Very, very tight in that range. So we initially broke both of them and closed below both of them, got this initial bid towards the higher one. We still do not have any candle closes above the downtrend one. So it's not that big a deal for a price to get a bid above the elder VWAP. Again, this one's drawn from 2011, guys, from a long time ago. So it's not strange for the price to get to that level. It gets pulled, it's been pulled to that level for months, for a long time period. But I do think the downtrend one is slightly more telling for us because, again, we are in a bear market. So we have to pay attention to how the price respects or does not respect that level. So that's what I'd be watching for. We got about 2 hours left in this 4-hour candle. I've been pretty chatty in the membership today, so I'll try to keep giving updates as it is relevant over there. I've been trying to shut my mouth for, like, most of the scalps I lost money on. I didn't tell the members about those scalps, Like, I was just trying to feel out where the market was at between Friday and Saturday. I don't think I really did much Sunday. But I've already made back everything that I lost just by focusing on today's short. So for me, really what I'm looking for, and my apologies, guys, this is always a longer ramble than I intend for. Really what I'm looking for is just confirmation of whether we get another tag of 80K or not. And if we cannot get another tag of 80K, that's going to pull the price down. So maybe something happens at Jackson Hole or one of the other Fed data is super, super bullish again, but I don't think so. I don't know how they're going to be more bullish than what people thought was bullish last week, which again, for me, the government saying that they need to buy back their own debt because nobody else wants it is not turbo bullish. It's not turbo bullish until they actually start printing money. They are not going to start printing money until there is structural weakness in the stock market, which again means that the majority of this money is just leverage, which means it can be shaken out if we get to key levels, which again, would be basically below 75.5. If we start to tag below 75.5, I would be more interested in treating my short trade as a swing trade instead of a scalp, but that's pretty far away. We've got a decent amount of support at 77.7, decent amount of support at 77.3. Again, well in advance of needing to tag that 73.3K level. So basically, guys, I would just be paying close attention to how is the price behaving between now and Tuesday evening. And again, how are the 4-hour candles behaving? You can draw the anchor view up for yourself. Again, like I said, go over here underneath volume base anchor view up, put it on the 126 all-time high in October, and you'll see the same information as I see here on my chart. But if we get multiple 4-hour candle closes where the body is below that band, that's gonna put pressure on it back towards the lower one, which again is at 77.5, which is also pretty much exactly where the 4-hour SMA is. So we did just consolidate for a long time after rising above the 4-hour SMA. We respected it pretty well. I was talking about this with the members over the weekend. I don't know. I don't know. For me, there's not enough momentum to just blindly carry us to 83K. It's not impossible that we get there, but that will be predicated upon, can we get full-bodied candle closes above that 79.4K level, which would invalidate my short, or do we continue to get candle closes that are below that, therefore at the very least necessitating a move towards the 4-hour SMA again at about 77.5K. Doesn't mean it's going to reject it there, just means it's going to want to be pulled there. And I may close my short at that point because I'll have already made a decent amount of money, and then I can just wait for the clearer setup, which again for me is probably going to be closer to Wednesday. And again, we have to pay attention to Friday's news. So I am thinking about where I'm at right now as scalps, not as swings. If you want all the rest of my thoughts, you can go check your email, go read the newsletter. Everything else you need is on the website, bitcoinescapeplan.com. Again, if you guys want to try a trial membership of the 4-hour break room, you can get that information only down below or in the daily emails. You will not find that anywhere else. Questions, comments, concerns, leave them down below in the comments. I will get back to them as always, unless I missed you, and then I'm so sorry. It's not personal. YouTube just didn't give me a notification for it. Yeah, so that's what I'm paying attention to now, guys, is do we get another retest of 80K? It looks like we are moving towards the 5-minute SMA at the moment, so that will confirm for me in the short term whether or not I should close this short or stay exposed to it. But broadly speaking, if we cannot get full body candle closes above 79.4K, I would expect to start to see structural weakness, at least back towards the 4-hour SMA. At that point, again, I'll be talking to the membership about it. Otherwise, you gotta wait till tomorrow, and I'll talk to you then. Have a wonderful day.